Hi everyone, welcome to another video by Optionables. My name is Saket, and in the previous video yesterday we discussed what are the expectations from the budget 2022. Today in this video we'll be discussing two things. One is how has the market performed on the budget days previous years, and also what strategy we can deploy tomorrow. This will be completely related to budget as well as markets. And there is also one more exciting thing, that tomorrow we'll be going live from 10 AM and we'll be deploying the strategy whichever we learned today live in the market. So 10 o'clock we'll log into YouTube and we'll be live on YouTube and we'll deploy the same strategy, and post 1 o'clock, that is post the budget speech is over, we will have a live interaction. So till then we won't be having any sort of live interaction, but post the budget speech we'll start having a live interaction also. So before we actually discuss the strategy, I would also like to tell you quite a lot of things which will help you to plan your budget day trade. So these are market related data as to how exactly the market has performed on the budget day. So if you know this well, you can also plan your trades pretty well. And also one more important thing before we move on, that whatever we discussed today, the strategy or whatever we'll be deploying tomorrow, I would recommend you to consult your financial advisor before you follow this strategy or follow a trade tomorrow, because whatever we are doing right now is only for educational purpose. With that, we'll be quickly moving on and looking at the market data on the budget day. So let me present you some data points. So 7 out of previous 10 budgets, excluding interim budget, the market has actually ended negative. So that means 70% of the times post budget, the market is going to go down. So does it mean that tomorrow also it will go down? We don't know. The data suggests that 70% of the times the market is expected to end lower. So what is the catch here? So the catch here is, out of the 22 previous budgets, right, 14 times the trend has actually reversed post the budget. So what do I actually mean? So if you see, previously we had something called as a pre-budget rally, where the market would actually rally quite a lot before the budget, and after the budget day there usually used to be profit booking where the market would come down. But we also get to see that almost 66% of the times the market trend reverses post budget. So we saw that in the last budget also, market had fallen from 15,000 somewhere towards 13,500. Post the budget, the market came back towards 15,000. So even now the trend is actually downwards. So we have fallen all the way from 18,500 to 17,000, and we don't know if, let's say, the budget is pretty good, the market has not discounted anything good. That's the reason it's already down by almost 10%. If something positive comes, then we can definitely expect a trend reversal. So important things we have to note here is that 70% of the times the market usually ends negative, and 66% of the times the market has actually seen a trend reversal post the budget. So these two are the important data sets which we have to work around. So here is one more interesting data set. 1 month post the budget, the market out of the previous 22 times, 14 times has moved more than 4%. So what does this exactly mean? So right now Nifty is trading somewhere around 17,300. If we extrapolate the same data, then we can expect the market to trade between 16,500 to 18,000 only 30% of the times. Then 70%, there is a 70% probability that the market will either go above 18,000 or below 16,500 after the budget. So this is what we have extrapolated from the previous data. It doesn't mean that it has to happen this time also. So there is a 70% chance that the market will end up either going above 18,000 or going below 16,500 post the budget, and there is a 30% chance market will end up trading between 16,500 and 18,000 1 month post the budget. So this is very important. So next I am going to give you one more very interesting data set. So previously when we had budget in 2021, the market rallied close to 5% and Bank Nifty rallied close to 9%, and all the option buyers ended up making a huge sum. If you had done a long straddle, you ended up making some huge money. But the thing is, what we have to note here is every budget this is not the case. Most of the times buyers actually end up losing money. So let me give you the data as to why exactly this is the case. So based on the data what we have, out of the past 12 budget days, Bank Nifty's average movement is close to 2.3%. That means we can either expect Bank Nifty to move up an average of 2.3 or fall down an average of 2.3%. So this is the average. That means some years it would have just gone down by 0.5%, some years it would have gone down by 5%. Similarly, some years it might have just ended flat or just moved around 2%. So if we cumulate everything and take the average, we are going to get an average of 2.3%. So it can either be on the upside or the downside. We have taken the absolute number. As on date, what we have to note here is Bank Nifty weekly option premium. So I'm not even talking about monthly. Weekly option premiums is pricing in a movement of close to 4%, and this is extremely high. In case if Bank Nifty moves 4%, then it definitely makes sense. But every time Bank Nifty is not expected to move 4% post the budget. Last time we saw a movement of 9%, that is agreed. But generally you can expect an average movement of only 2.3% from Bank Nifty. But the interesting thing is option premiums are pricing in close to 4% move. Even now you are having close to 1400 to 1500 points of premium in the at the money straddle. So that means in case if the Bank Nifty doesn't move more than 4% or 3% on the budget day, that is tomorrow, the at the money straddle is going to lose premiums quite a lot. There will be a huge IV crush which will push down the premiums quite a lot, and option sellers will actually end up making the money. So we don't know how exactly it is going to behave tomorrow, but all we know is the data what we have. The average movement in Bank Nifty is 2.3%. So now we'll also look at what is the average movement in Nifty. So the average movement in Nifty usually has been 1.2% on the budget day. It can either be 1.2% up or 1.2% down because we have taken the absolute number, right? So the thing is, the average expected move in Nifty is just around 1.2%, but the premiums are pricing in close to 2.5% movement in Nifty, which is almost double of what is Nifty expected to move. And tomorrow, if the budget is in line and we don't see a huge movement in Nifty or Bank Nifty, again we are going to have a pretty big IV crush as well as premium decay in at the money straddles. These two are some very important things that we have to make a note of, because not every time we'll see movements like how we witnessed in the last year. So that's the reason every year just buying options and hoping that it is going to go up is not a great idea. So that is something I wanted to tell you in this particular video. So with this, now we'll be quickly moving on and looking at some budget day strategies, what we can do, and we'll also deploy it tomorrow at 10 AM sharp, right? And one more important thing I would like to tell is we can actually test free budget day strategies on Stockmock, and I have put the link in the description below to open an account in Stockmock, and by this you will be getting 2 times the free credits if you sign up otherwise. There was a huge confusion regarding this, so I would like to clarify this as well. So usually when you sign up to Stockmock with a normal link, you will be getting 20 credits. But if you use the link in the description and sign up, you will be getting 40 free credits. So some people got confused where they thought that when they recharge, every time they will end up getting double the credits. So that is not the case. Only during sign up you will be getting 2 times the free credits. So when you recharge, whatever credits you will be getting from the recharge, it is going to be the same. There you are not going to get double the credits. So this is one more thing which I wanted to clarify. And the best part is backtesting on Stockmock for budget day is absolutely free, and I would definitely urge you to check it out. Now I'll show you a system-based trade and backtest it on Stockmock and see how it has performed on the budget day. So tomorrow also we are going to deploy the same system, and let's see how it has performed. We'll be now quickly moving on to the computer screen. So now we'll be discussing totally 4 trades, 2 in Nifty as well as 2 in Bank Nifty. So before we move on, it is important for us to understand why exactly are we looking at system-based trades. The thing is, on the budget day, the market is expected to be extremely volatile. So the market starts moving up, then it starts coming down. As and when the news starts coming in, the volatility starts to increase. In such a market, it is very hard for us to take a directional view or anything discretionary. So I don't know if the market is going to go up or market is going to come down. I have absolutely no clue what is going to happen. In such cases, it is always good to stick to a proper system, because the result is anyways not in our hands. So the only idea is we won't get emotionally involved in the trade. Otherwise, what will happen if the market starts moving up and let's say your call option starts to expand? You will start shorting additional put option. Later it comes back, your put increases, you might end up shorting more call option. So the entire position will start to get extremely complicated, and we don't want complications. We want to keep it as simple as possible. So that's the reason we'll be using two systems in Nifty as well as two systems in Banknifty. We are going to enter it and we are going to put stop loss and leave it. So afterwards, let the market move however it wants, because we won't get emotionally involved in the trade. So later we are also going to backtest the system. So there is one more thing which I would like to tell you here. So I did some amount of backtesting and I found this to be good. And I would really request you to put in the comment section if you can find any better system, because it will help the entire trading community as a whole. So I would also request you to backtest and see which other system is giving you better results, and put that down in the comment section, because it will be helping everybody. So the system I would be suggesting right now is one entry at 10 a.m. and one more entry at 11 a.m. So it is very simple. You enter Bank Nifty and Nifty, one at 10 a.m., one at 11 a.m. So what exactly are we going to do? At 10 a.m., we are going to short Bank Nifty ATM short straddle, and we are going to place a stop loss of 40% on each leg. So Bank Nifty ATM short straddle, 40% stop loss on each leg. At 11 a.m., again we are going to do Bank Nifty ATM short straddle and 40% stop loss on each leg. It is a very simple system. We are just going to create short straddle and place a 40% stop loss, both at 10 a.m. as well as 11 a.m. So similarly for Nifty also, it is one and the same. At 10 a.m., you do Nifty short straddle and keep a 40% stop loss. And again at 11 a.m., you do a Nifty short straddle and keep a 40% stop loss. And after this, we are not going to do any trade. So I hope that you guys are pretty clear with the entry. Only thing is you are going to do a short straddle in both Nifty as well as Bank Nifty at 10 a.m. as well as 11 a.m. and keep a 40% SL on each leg. Next, the idea is, in case if the market is extremely violent, then we want to limit our loss. So for that, what we are going to do is, in case if SL gets hit in one leg, so let's say the market starts moving up and call leg SL is triggered. So this time what we are going to do, we are going to bring the stop loss of the other leg to cost. So that means PE stop loss will be brought to cost. Let me just give you an example. So the example is, let's say CE is shorted at 400 rupees. PE is shorted at 400 rupees. The stop loss is kept 40%, which is 560 as well as 560. And let's say CE stop loss is triggered. That means you're going to change the PE stop loss back to cost, which is 400 rupees. So this is a simple change what you have to do just to prevent huge movements and huge losses. We are going to just backtest this simple system and see how it has worked on budget days. So for that, I'm going to open Stockmock. So once you open Stockmock, just click on budget days. So here you can backtest it for free, absolutely for free. And the strategy what we discussed is we are going to sell a call option, ATM one lot, put option, ATM one lot. And I'm going to click move stop loss to cost, because we discussed that once a stop loss is triggered, we are going to move the other stop loss to cost. And the stop loss percentage is 40% as well as 40%. And the entry time is 10 a.m. and exit time is 3:29. So let's exit almost towards the end of the day. So nothing else. It's a pretty simple system. I'm just going to backtest this system. So along with this, let me just backtest for 11 o'clock as well as Nifty trades also. So now we are done testing everything, Bank Nifty 2 as well as Nifty 2 with 40% stop loss and SL move to cost. As we can see the data, so with one lot alone, over the course of last 5 years, this particular strategy has given us a profit of close to 19,000 and the maximum loss of 2,483 rupees. So that is the max loss. That is also the average loss because there is only one budget day where it has given us a loss. So remaining all the budget days, this 10 o'clock strategy has actually given us pretty good profits. So we can see that even in July we had an interim budget. So this is with respect to 10 o'clock strategy. With respect to 11 o'clock strategy, again we have one single budget day in 2019 where this 11 o'clock strategy gave us a loss, whereas all other budget day, this particular strategy has given us very good profits. The maximum loss was around 2,300 and we also had a maximum profit of close to 7,000 rupees. Return to MTD as well as expectancy is extremely high. So this strategy overall has given a profit of 22,000 rupees. So why are we combining both? So the main reason to combine both is you can see that in 2017, that particular budget day, we had a loss of 2,400 rupees. But if we had combined both 11 o'clock as well as 10 o'clock, we would have had a profit of 1,300 and odd, both put together. Similarly, in 2019, if we had only put 11 o'clock strategy, we would have had a total loss of 2,300. If we combine that with 10 o'clock, we would have had a loss of only around 900 rupees. So that's the reason we are actually working in combinations of 10 o'clock as well as 11 o'clock. And now after this is the important question of what exactly happened to Nifty's trade. So you can see that even Nifty's trade has given us very good profit. For Nifty, the issue is since the weekly option started, there were only 3 budgets which took place, one in July 2020 and 2021. So you can see this is the 10 o'clock strategy. Let me just check. Yeah, this is the 10 o'clock strategy. And as you can see that all 3 budgets, it gave pretty good profit. And this is the 11 o'clock strategy, as you can see here, entry time. Even this gave profits in all 3 budgets. So overall for Nifty, all the 3 times it has given profits, and this strategy for Bank Nifty has given loss only once. 10 o'clock has given loss only once and 11 o'clock has given loss only once. So this is the strategy what we are going to use tomorrow also. What we are seeing right now is the past data alone. So we can't expect that something will happen like this tomorrow. So that is something we don't know. So markets can behave in a completely different way and we can also go to a loss. Just because it has given profits on 5 out of 6 budget days doesn't mean that your 7th budget day is also going to be profitable. So if we are using this strategy, we must be ready to take the loss. That is something extremely important. So whenever we are using any strategy, we must know about the downside and we must be ready to accept the loss. There's one more important thing that I would like to tell. Since all the strategies or whatever we are going to discuss comes with a risk, I would also recommend you to consult your financial advisor before you implement or deploy any of these strategies. So that will bring us on to the next question about position sizing, margin management, and maximum loss. There are few things that we must be extremely clear of before we decide what is the position size. One is how much loss we are ready to take, right? So let's say you are doing one lot and you are ready to risk somewhere close to 3% of your capital tomorrow. So if you are ready to lose 3% of your capital tomorrow, let's say that is the max risk that you are ready to take. In that case, so we will just see what exactly is the overall loss given by all of them. So this particular day we lost around 2,300 and we lost again around 2,400 on a particular lot. So let's assume we end up in a worse situation where we end up losing somewhere close to 10,000 a day. Everything hits the stop loss and we lose 10,000 a day. So what does this mean? If we are ready to lose only 3% of the capital, this is the worst case scenario because on an average we saw that whenever the stop loss is hit, we are going to lose around 2,300 and we are assuming that all 4 trade stop loss is going to get triggered. So what we are looking at right now, that is This 10,000 should be 3% of our capital. Then how much should be our capital? So that is going to give us a number of close to 3.5 lakh. So 3.5 lakh is the capital that we are expected to have. But we will also try to make this even safer by having 5 lakh to execute all the trades. So based on the risk appetite what we discussed, we did understand that we need around 5 lakh to execute one lot of each. The only issue is we won't be able to execute all the trades with 5 lakh because one lot of Bank Nifty itself is going to cost you 1.8 lakh. And then you're going to take 2 trades in Bank Nifty, which is going to be 3.6 lakh, and you don't have any margin left for Nifty trades. So that's the reason, even though 5 lakh is sufficient to take all the trades, the capital what you would require would be somewhere close to 8 lakh to execute both trades in Nifty as well as Bank Nifty. So this is the capital which you would ideally require to execute all the trades. The moment you hit a loss of 10k, overall M2M of 10k, you're just going to exit all the trade. It doesn't matter whether the trade is going to go to profits or loss. So this is a very important threshold level. The moment we are going to hit a total loss of 10k, we are going to exit all the trade, right? So this is the idea what we have for tomorrow, and I'll be going live around 10 o'clock and I'll be executing the same strategy what we discussed today. I'll be placing the stop loss and let's see how it goes. And one more very important thing, we don't know how the market is going to behave tomorrow, and whatever we are going to backtest or whatever we have backtested up till now is only based on the past data. So markets might behave like that tomorrow or might not. So that's the reason it's very important for us to make sure that we always control our risk, and also do consult your financial advisor before actually deploying such strategies. And meanwhile, one more important thing is, in case if you guys can find any better strategies, you can test on Stockmock. And if you find any better strategies, do let us know in the comment section. We would love to take your inputs as well, because end of the day, we just want to grow as a trading community together. With that, we also come to the end of this video. And if you have liked the video, then please do hit the like button, share this video as well as subscribe to Optionables. Thank you so much for joining.